And another story that we're tracking here this morning, got to get to our trending ticker. The New York Times cracking down on OpenAI and Microsoft in a lawsuit yesterday. But could sentiment surrounding the impact of AI chatbots be shifting? In a new note from Evercore ISI, analysts said that investors have begun to view this as a potential growth opportunity, writing, "We believe the most likely outcome is that the Times signs several AI licensing deals over the next few years that are each worth low tens of millions of dollars of revenue per year that largely follows through to AOP here." One of the things that I had found when I went back and did a deeper dive actually into this filing yesterday was what the New York Times was alleging here. They said the defendants, Microsoft, OpenAI here, engaged in wide-scale copying from many sources, but gave the Times content particular emphasis when building their large language models or language learning models, their LLMs, revealing a preference that recognizes the value of those works. And so now, New York Times is essentially just saying on top of that, they want to be able to monetize their work because they've spent so much in the journalism, they've spent so much in making sure that they build up what is more reputable as ranked when it comes to the generative AI and LLM models.
Well, Brad, I go onto the Yahoo Finance platform and I play around with our new compare feature. And you go to New York Times and it's trading as if these deals, these licensing deals that you mentioned that Evercore was talking about, this is a done deal. This is definitely going to happen. The stock has gone through the roof. It's trading about 45 times trailing earnings on a P multiple basis, market cap of over $8 billion. Now, Evercore does bring up this good point, and I think underscores why these deals ultimately need to get done and will likely get done. Evercore noting decreases in search volume presents a risk to New York Times 50 to 100 million average weekly digital audience, presenting a direct risk to digital advertising revenue. It falls, I think, both parties here, big tech and then ultimately the publishers. They have to work together. And you can see that chart there from Evercore really breaking down how much these companies like a New York Times are in fact reliant on search advertising and just search on the internet broadly. Deals have to get done. You know, it will benefit big tech, but also of course benefit the publishers that are working really around the clock to put a lot of this absolutely amazing content into the hands of users.
And so it's a question of where else could this kind of raise the tide in revenue for some of the other news publications that are publicly traded right now. You think about one that has leaned fully into generative AI, at least on the publishing side, and BuzzFeed. I mean, this is a stock that's trading below, 27 cents a share right now, and is unfortunately probably on the pathway to some type of delisting notice. But at this point in time, BuzzFeed, News Corp, is what New York Times putting out there so powerful and precedent setting that it could open up or unlock some type of additional revenue for other publications out there as well.
Yeah, I wouldn't be surprised if you start seeing these deals really begin to funnel in the first half of next year.